Good afternoon, everyone. It's 3:23 here in West London. I suppose the American market has been going out for the guts of an hour. So 3690 on the S&P, market up 35 points on the day. So most of that done in a gap at the open. That hasn't affected the trends on VectorVest much at all. The underlying trend is down, the short-term trend is down, and the longest-term measure of the trend on VectorVest, the confirmed down, is still in place, has been in place now for about a month. There's 275 shares on the buy, 5,300 on the sell, and as a result, the buy-sell ratio is right down on its knees at 0.05. A mega oversold condition, and the MTI is at 0.39, again a mega oversold condition. So I think I've got the VectorVest composite open on a chart. There we go. And that's the VectorVest composite. I'm going to take off all the signals for a moment. That's over the last 6 months, folks. And this is the VectorVest proprietary MTI. And this is the proprietary buy-sell ratio, the number of shares on the buy divided by the number of shares on the sell. And as you can see, market's been selling off after the rally from June. It's been selling off. I think a really important level was this level. Once that level was broken, then the market went into free fall for most of last week. That was a really important level, which defined this move up as being a corrective move. And what happens after a correction, the trend, in fact, just keeps on going. So let's look at the trends now. So if we look at the longest term measure of the trend on VectorVest, there's the confirmed calls over the last 6 months. And that nailed that high for most of the year, from April right through to the 19th of July. A nice little move up here, which was quite tradable, certainly for short and medium-term traders. And then since exactly a month ago now, we've had a confirmed down in place. The one thing that we do see from the chart, folks, is that the price is making a falling low here, but both the MTI and the buy-sell ratio are also making falling lows, and that unfortunately is saying that the trend is speeding up to the downside, and that is not a good sign for it. Anything can happen, but invariably the price will fall and the MTI will rise and the buy-sell ratio will rise before we see a meaningful turn. And that's called normal bullish divergence, which is absent on this chart. We put on the medium-term market timing system, which is called the DEW, and the DEW normally acts faster and got us in a week before the confirmed call here. That was on the 19th of July. Unfortunately, because it reacts quicker, it has the odd false signal, and there was a false signal at the start of June. What can you do? Nevertheless, for the last more than a month now, it's been down. And then if I look at the primary wave, I'll look at it over 3 months, which is the shortest term measure of the trend. There's the primary wave, folks, and as you can see, reacts beautifully. Look at that lovely move on the upside. And certainly I found that in my short-term trading of the SPX, that if my trades are in sync with the primary wave, they tend to go quite well. They tend to go well. So unfortunately, from this particular chart, if I get rid of the timing now, to me it looks as if I think we're due for a bounce, and we'll see that maybe a little bit more clearly on the SPX in a second. SPX has been stronger than the general market because the SPX still hasn't conclusively broken the June lows, whereas the broader measure of the market has. But to me, I think that we're definitely due for a bounce. I will be treating that as a bounce in a downtrend until it proves itself to the contrary. invariably we're going to see some divergence on the MTI before a major bottom is in. So we still need to be darn careful out there, okay? And it's certainly too early for me to get in. I think that many of that follow the bottom fishing strategies, there may be an opportunity ahead. If I have a look now at my dear old friend, the SPX, there's the SPX, and as you can see, there's the June lows, and that's where we are. In fact, in the UK market, we're in exactly the same position. So we've got a double bottom in the SPX, and it's now fighting, I think, to get up through this particular high. It went up there this morning, right at the open, and it couldn't stay up there for more than a couple of minutes, and it was sold off. There was, in fact, a upthrust exactly at that level, which I'm glad to report I made a few ticks out of. If we look at the very short-term nature of the market, then I think if we were to break up and close above this level, folks, that we can get a 3 to 5 day bounce. It could go up to heaven from there, but the position of the MTIs I just spoke about makes that unlikely at the moment. So if I look at this on the 5-minute chart, yeah, there's the 5-minute chart, and that's what happened today. It went up there, it pulled people in at those highs, and then promptly stopped quite a few of them out. Just couldn't, it was up there for a microsecond. That was a good short, but I'm not quite sure what's going to happen now, but I haven't got a trade set up here at the moment, right in the middle of the range. Those of you that know my work will know that I like to get involved at the extremes. So if I was trading a 5-minute chart, I want to be long somewhere down around here, short somewhere up around there. I think that we're building a bottom here, and that we'll get a bounce in these markets over the next couple of days, but I think it'll be no more than a bounce, something like this. Anyway, time will tell. At the moment, the only reality is the trend, and the trend on all time frames is down. And here's the advice on the front page of VectorVest. VectorVest does not advocate buying stocks at this time. That's darn good advice. So let's just sit in our hands. I haven't got any US positions. I've been waiting for a trade in gold, which just hasn't come. And I'm still stoking that particular trade. If we were to close above yesterday's high, I would be tempted to look for longs in this market to take advantage of the bounce on an intraday basis. On an end of day basis, I'm not going to do anything until I at least see some green lights here, and I see the DEW market timing system moving up. This is a very dangerous week coming into a very dangerous month in markets. And the news flow couldn't be worse. I think it's time for us all to spend a lot of time on the stock viewer, looking for stocks that are now that have got great fundamentals that have been sold off, that we will be looking to buy as soon as the general market starts to move. So that's in soccer it's called running off the ball, and that's what I think we should be spending our time on now. So again, if we look at the this market, it's still sitting in the middle of this range. I think a close above this today, and we can quite easily get a very nice bounce here. At the moment, absolutely nothing to do, even intraday, as it sits in the middle of this range. So unfortunately, I spent quite a bit of time pretty much saying nothing, apart from the trend is down, and that it's right to the bottom of this range on a double bottom, so it would be very, very foolish to short. So if you are of a short disposition, I think that this would be a foolish place to short, because you could get caught in a short squeeze here. So even if you are short or thinking about going short, I think it's the wrong place to go short. So nothing to do whatsoever. I hope this helped. Thanks very much indeed.
Vector.